140,000 Bitcoins could be hitting the market soon. And the question is, will they be market selling that? Well, the market seems to think so, which is why they have been selling off already. You can see the crypto bubbles chart over here with a massive, massive sell-off on the daily as well as on the hourly. So big 15-minute candle to the downside. And some of you may be wondering, why did this happen? Well, it's very, very simple. If you take a look at this over here, I said, good morning, we deserve this dump. These are the Denver devs. Anytime that Ethereum devs meet up and they decide it's time to start singing and dancing, this is your result.
This bear market's on you. In the next bull market, we promise not to use centralized exchanges run by these toxic dudes. It goes, not your keys, not your coins. When will we ever learn? Never. So take heed of the one and only call of the 𝗕𝗲𝗄𝗿𝗄. For Talbot rides on the magical steed.
So it's these damn Denver devs once again, at it again. The last time they met up and they made up their songs, they had a different song. Same thing happened. Market sell off instantly, instant market sell. So what are we looking at next? In the higher time frame perspective over here, not much has changed for Bitcoin, at least on the monthly chart. You can see that the RSI stochastics are continuing towards the upside. So you have an accumulation pattern that is still building over there. You do have the MACD, which the histogram is still slowly but surely moving from aggressive red into lighter red bands and moving on its way towards the upside. Once it crosses the zero line, that is actually when the real market moves start to take place towards the upside. Let me know in the comments, guys. Are you here? I see William Hill's here. We got Crimson Caravan Company. We got Banter Girl. Dev, we got Chaos. I saw you in the comments over there. Are you present today? Smash the like button, hit the bell notification, and subscribe to the channel if you're not already subscribed. But looking again, yes, at the monthly chart. So monthly MA50, very, very key level of resistance. And you wouldn't expect that you're going to crack this one very, very easily. So this is a very important zone to constantly track. Put on the MA50 on your monthly chart. Use that as the major pivot point. Once the market clears that level, you can say all upside major resistance are likely to be broken. You have the MA7, so the 7 moving average is the white one over here. This is going to be an area of support if price action does come all the way down to those levels. Currently, as of today, it's sitting at 20,311, and that moving average will constantly be rising up as time passes by. Then you have the 20 moving average, which is the yellow one over here. That is also going to be an important level to contend with on the monthly chart. Once price clears this, that's going to be your main range. So when you use these moving averages and exponential moving averages, you can also use it as a range. The same thing as the Bollinger Bands. When you put those on, you have an upper Bollinger Band, lower Bollinger Band. It kind of creates that whole range zone that you're looking at, with the middle Bollinger Band being that mid-level. So once you get above this one, you can say you're going to start to oscillate between 24K and 32K, but we're still yet to break that zone. Yesterday, we brought up the Gaussian channel on the 5-day, or at least on the weekly chart over here, and we outlined the major comparison levels to 2015. So from a fractal perspective, you can see a lot of similarities. And what happened over here is you had the first major sell-off. This is very similar to what we saw in Bitcoin back in November. I'm looking at the 2015 part of the graph. Then price bounced back up, and eventually you broke these lucid SARs. You reclaimed the moving averages, or the EMAs. That is the 9 and the 18 exponential moving average, the 9 being the white, the yellow being the 18. You got the golden cross on that, but it was a fake out. 1, 2, 3, 4, 5, 6 weeks and breakdown. You broke down for one more sweep towards what would have been the range low back then. So let me draw it in for you. As you can see over here, when you look at that chart, that would have been the range low. Let's make it nice and big. I hope you can all see that. Or actually, I have something already for this. Let's put over here, range low. There we go. So that would have been the range low that you're looking at back in 2015. Now, let's go back to current price action and see the similarities. Look at the push into the Gaussian channel. Look at the rejection from that zone. And remember, very importantly, from the golden cross, we had 1, 2, 3, 4, 5, 6 weeks. On the 7th week, we were completely under there and we hit the range low. Let's see where current price action is. So golden cross over here, that's going to be 1, 2, 3, 4, 5, 6, rejecting off the Gaussian channel. Where would the range low be? Well, you guys know it. You guys know the range low very, very well. This is going to be the range low. If history were to repeat and price action were to come all the way back down into that zone, this would be almost a one-to-one relationship, a mirror effect of what happened back in 2015. But until such time as you lose those moving averages, it's still risk on towards at least, well, this means that prices can continue on up into the Gaussian channel, and over the next couple of months you'd be looking to tag the middle, which is at 29k, and possibly later on flip that. Remember, timing wise as well, this suggests that sometime, I think it was in April. So if you look over here, we've currently had a red Gaussian channel. From the moment it flipped red was 39 bars. And I'm just reminding the guys that weren't here yesterday, because I know that the market was boring yesterday, so you weren't here, and now today you're here. So we're going to just go over this one more time for those people. So just bear with me. Have a look over here. From the moment it turned red, okay, price then came a couple of weeks later. So after the rejection, it was about 1, 2, 3, 4, 5, 6, 7, 8, 9. So call it 10 weeks, about just 2.5 months later, you were back in that Gaussian channel, and then you started to rip through. After 49 bars, you're already out the top of that Gaussian channel, and it fully flipped green. At that point, price is way above the Gaussian channel, and you're starting to establish a new bull run. That is 58 weeks later. So again, relating to where we are now, 58 weeks later, what would that look like timing wise for this one? Should it follow exact? So 58 weeks, you're looking at, there we go, it would be around the 10th of July. You would expect then you're completely out of this zone, which is why I think that dollar cost averaging is so important at the moment. If you are looking to capitalize on a highly volatile market and potentially catching some of the bids near the bottom of the market, consider dollar cost averaging in and around these regions. Because if this fractal is going to play true to what happened in 2015, then pretty much over the course of this week and maybe next week, you expect that prices are going to pull back down one more time and go into that range. And we definitely are still within a range. Now, high time frame on a weekly chart, I have it on logarithmic scale over here. Have a look at this trend line retest that we've had, which comes all the way back from 2019. So you have over here 2018, 2019, then you got the COVID dip at 2020. Can we even call that a dip? The COVID nuke of 2020. Then you have the next trend line retest over here in November of 2022, another one over here in December. And if price action were to come to those levels, just to show you where this would line up. So if I had to bring it down over, let's say you track it at a reasonable rate and you say over the next couple of weeks, you come down into that region sometime in April, you're looking at a price level of 18,500. Now, isn't that interesting? 18,500, it lines up exactly what I just showed you with those range low regions. So this being the range low, right? Price is capped between a range. You have a super clear range high. Let's zoom in for you. Super clear range high over there, range low, and your mid-range is going to be in and around this region over here at about 21,600. So this is an important zone. We need this level to hold. Let's quickly use our fib retracement level over here and just mark that off for you. Grab the range tool. There we go. So there you have it. Mid-range is currently coming in at 21,800. You want to see that level hold at least to continue the hope for the bulls. If that starts to get lost, then you can say, well, most likely we're going to retest that range low. Imagine how fearful the market gets once you start to come down into these levels towards that range low, and possibly you could even deviate, right? The same way that you saw the deviation over here. Maybe you'd see something like that. Small deviation back into the trend line, reclaim over there. That would be your bullish trigger to continue on towards the upside. But we're not there yet. We still need to be patient. We still need to wait, because for all you know, price could just bounce off of this level right here and continue on up. My base case scenario, the main scenario that I personally was looking for, is I was looking for price action to hold as a higher low And I wanted to see one more spike, which still could be a possibility, by the way. You might see one more spike up, a deviation above that range, and then you come back into the range one more time. So this was a deviation over here, and I was looking for a deviation there. Might still be possible. Keep a close eye out on that. All right, Bitcoin over here on the weekly chart, same thing, rejection from that 50 MA, which is on the weekly, and then you have the purple 200 MA, which is obviously a big task to get through. I've said it before. This is not David versus Goliath. This is David and Goliath versus you. To get through that 200-week moving average is very, very critical. That's why you can say once you cross through these levels, once you get above 25,300, which lines up with that 200x, the 200 MA, the purple one, as well as the strong horizontal resistance, a lot of things change within the markets. Remember, the markets are heavily driven as well by bots and algorithms. So bot traders that are running their programs, and those programs will all start firing long signals once you get above that 200 week moving average. That is kind of the high time frame trader perspective. So pay attention. Once you start to get above there and you start to close, things will start to flip bullish very, very quickly. And you can see the sentiment, the way it shifts is just like that. Same thing on the 200 daily moving average and the EMA. I'm going to show you that on the low time frame. When you're looking at it on a daily chart, bullish above there, bearish below. Watch how quick the sentiment flips. When we lost it, everything was doomed. We're going down to 8 to 9K. As soon as you're above it, people are talking already, I think, about like 45K Bitcoin target. Second, you're above it. So sentiment flips very, very quickly. And right now we're in a choppy environment. We haven't looked at this one for quite some time. This is the Renko chart. I will zoom in for you now. Renko chart. You'll only be able to see it if you're on premium. It's been quite a good indicator. I just want to show you from the past what it's done. So let's take a look at the price action that happened back in 2019, 2020. So around this region over here. This flipped long at $6,200, right? Renko told you to hold your positions, and there were fake outs, right? There were fake outs towards the downside that scared people out of their positions. You can tell by the wicks over here. Look at all these wicks. These were, if you look on a normal candlestick period, this would be very, very scary periods, similar to what we're seeing now, where price action comes straight back down, and then we continue the trend up, straight back down, continue the trend up. Anyway, point being, this told you to be fully long 6,390. Told you to get out of your position at 39,600. Well, in this candle, so 38,600, right? Got you back in at 35,000, got you back out at 37,000, and then it got you back in for the last leg up at 31,400. That was, remember, around that Jan low, and then it pretty much held you in all the way up until 54,000. So pretty good trading system. Very, very simple. You just put it on like that on a daily chart, and you put the Renko on, and you literally just trade the colors once it flips green. So what do we have now? Well, if you look at this over here, this one flipped green, told you to get long, 17,000. Look at the big wicks, a lot of indecision over here, a lot of fear within the market. Same thing over here, big wick, green wick to the downside over there, and it's still telling you to hold your longs until such time as you see Renko print red. Technically speaking, if you are trading this system, this would be telling you to hold your long positions. Okay, liquidity charts. Nothing has changed over here. I'll update you when something major shifts, but liquidity is continuing to the downside. China have not put out another liquidity injection into the market, so pressure to the downside over there. Yields, very, very important. Let me know in the comments. Do you think the market will survive this much longer? Something has got to give. Something has got to break when the yields go up like this. So Dylan Leclerc showed it 2-year yields at 16-year highs, 6-month yields 13 basis points away from 22-year highs. And then he says a cost of capital repricing results in an all-encompassing valuation repricing event. Markets conditioned by over a decade of ZIRP and QE, so quantitative easing and passive indexation, have yet to fully recalibrate. So the market needs to reprice. This creates that whipsaw effect. I did do a video on it. It was sometime in December. Go have a look. It's got a chart with like a thing that looks like a whip. The whipsaw effect essentially entails when markets become volatile like this and the Fed start to lose control of inflation, they constantly need to raise interest rates and try any measure and means that they can. So quantitative easing, quantitative tightening, and they lose control of the market. It creates a bullwhip effect where it creates these enormous ranges where price action swings both to the up and the downside. And this is why people like 𝗟𝗲𝗿𝗍𝗍, he said that the S&P 500 may not see a bull market for the next 10 to 15 years. It may not make an all-time high. Stand corrected. He said it may not make an all-time high. Let's go actually have a look at that. I'll quickly type it in. So 𝗟𝗍𝗍𝗍 over here. Let's see. Go through to his Twitter. And we'll look for that. Here we go. He said, the thesis for the S&P not hitting new highs for 10 to 15 years, it is more common than you think. However, it will be one of the greatest trading markets of all time. That all ties in with that bullwhip effect, right? You're getting these enormous swings within ranges, and all you need to do is buy the range low, sell the range high. Buy the range low, sell the range high. I recommend investing a bit of your time in range trading for what is to come within the markets. Looking at that 2-year yield, it has hit our target zone. Our target zone was within this pink box over here. So we said anywhere between 4.8 and 4.96. There could potentially be some sort of a rejection from that zone. So now we need to pay attention to see what's going to happen. We have the etchings of a red candle currently printing, but ultimately for crypto to rally, you really would need to see these yields come down. Rising yields are usually very, very difficult for risk on assets to rally. And consequently, there is a flight to safety, which some people call safety the US dollar. Others call it gold. Now, this is kind of what you're looking at. We've hit the one zone over here on the DXY, the dollar index. We've come into that 104.7. If you see the 2-year yield turn over here and start to come towards the downside, you can expect that the dollar may do the same thing. If the 2-year yield continues to blast on through there alongside the 10-year and the 30-year, then you can expect that the dollar is probably going to make it to its next target, which is going to be 107. Now, what would that look like as a percentage? 107 would take you from, just quickly go from there to there, about 2.3% move still to the upside. Of course, that is going to be difficult for crypto. That could easily send you back down to that 18K range, right? Into the range low. We're currently at mid-range, so you shouldn't be panicking quite yet. Once you start to lose the mid-range, then it's time to panic. Okay, S&P 500 or the futures chart over here, ES1. ES1 with the exclamation mark. That is the ticker if you want the S&P 500 futures. Looking at this over here, we did get a strong reaction. You guys know it. We've been talking about it for a long time. You have the dash line. It's the long trend line that's marked all the lower highs throughout. You have the 200-day moving average, the yellow one over here. Very, very, very important. We lost it temporarily. Look at that big reaction, right? Big, big spike off of those zones. An exact touch of that regression line that came all the way tracking the all-time highs, the dashed one. You had the mid-range, which is the next orange line over here. This was a key level. I marked it over here, but it happened a little bit later, so we can just move that up. That circle, that was the key level. We wanted to see a bounce from there. The question is, was the liquidity swept? Was it enough? Because usually the markets move towards the liquidity, sweep the liquidity, reclaim the key levels, and then push on up towards the upside to take the next liquidity. If the stock market is going to bounce over here, and that is a convincing sweep of liquidity, only way you can tell, by the way, you need a little bit more time. You need a little bit more time to see how the markets react today and how they close more specifically. Strong closes above the 200-day moving average would suggest that possibly that was enough. That was enough, and the stock market can continue on up towards the upside, meaning it held the key level, and then you're looking at 40.44 as the next zone. Next sweep of liquidity with a question mark is what I have written over there. So that's what I'm watching. If you want exposure to trading the crypto, or not just the crypto markets, but stocks, bonds, commodities, equities, things like that, consider using Prime XBT. I am playing around with both the copy traders. Overall, I'm 12% up on these positions. And then I also have my own trades, which is in gold at the moment. I'm currently taking a trade in gold. So let's just go through to the account. Where's my gold trade? Here's my gold trade. So it's a $50 trade, very, very small, because I'm just experimenting on the platform, getting used to the way that they run it. I'm up $27, which means I'm up around, what is that? It's like 45% up on the gold trade. So go check it out. There's a link in the description below. You need to use the sign up promo code if you want the bonus. They give you 7% or up to $7,000. So if you deposit a couple of $1 million, you're getting maximum of 7,000, which is not a full 7%. If you're less, you get 7%. Okay, hope that makes sense. All right, the Bitcoin dominance over here is breaking below its mid-range, still stuck in this range-bound environment. So you can expect that it's probably going to hold around this area for a little bit longer, and we'll wait for an ultimate decision. No man's land, can't really say too much about Bitcoin dominance at the moment. But total 3, we can say something about. We mentioned this for a long time. We said that altcoins would be getting absolutely smashed over here. So the probability of taking long trades is probably not the best idea, because you have a range-bound environment. You have deviations above the range, comes back in, another smaller deviation, comes back in, deviation at the bottom of the range, and then at the top, each time lower high, lower high, lower high. Now we are firmly back in that range. Your question is, are we going to consolidate and bounce off of this mid-range level, which is coming at 347, or are we going to round trip all the way back down to the range lows? I went through a lot of the altcoins. This is what I can tell you. I can tell you that many of the altcoins are situated around their mid-range. Remember, total 3 is kind of like a higher overview picture of whatever your favorite altcoin is doing. So for the most part, most of them are sitting either around their mid-range or they're already at their range lows. Things like 𝗬𝗏. 𝗬𝗏, I think, has come all the way back down to its range low. I'll show you the chart just now. What that means is if total 3 is going to puke further, if total 3 is going to make it all the way down here, then there's a possibility that if your altcoin is already sitting at the range low, it's going to have a massive, massive move below that, a big deviation, and you can trade that however you want. But I mean, that means it's still got a long way down to go. That's my point. Okay. Bitcoin channel, the channel over here, yesterday we said it has a high probability of breaking to the downside, but it could possibly get one more spike up, looking for that deviation above the range high and then to come back in. But you can see it started to break down. Yesterday was do or die, as we discussed. We needed the Bitcoin price to bounce off the bottom of this channel with immediate effect. Failure to do so meant that it's going to break down. That channel has now broken down, which means there's no point in looking at it anymore. It's a useless channel. You now want to mostly focus on a range or a less aggressive trend line running from the side over here. So what is a less aggressive trend line? Less aggressive trend line would look something like this. Let's just see how that lines up. Well, what would you know over there? If you look at that, I've only seen this right now. This kind of lines up wick to wick to wick. Perfect reaction off of that zone. Anything below there means that you're most likely going to break this zone over here, which is your higher lows, right? So you have low, higher low. If you have a strong bounce off here, keep the hope alive. Still a higher low. You still have the possibility of a triangle forming where you can have that breakout and still meet those measured moves that we were looking at based off of the rising channel, which I just deleted. Okay, hope that helps. Okay, let's look at a bunch of the coins. Do you have a favorite altcoin that you want to see over here? Let me know in the comments. Is there anything that you want to see? I see Driss is over here present. Welcome, Driss. Jake Best. Yes, it does look ugly. I agree with you. Who else have we got in here? Alfie and Teddy. Banter Girl. Let me know. MATIC. Okay, you want to see MATIC. Near. 𝗬𝗏. STX. GMT. Okay, I've got some of these charts. EGLD. DOT. Yes, DOT was an interesting one. We'll look at DOT as well. Okay, let's go through some of these. I'm just going to talk you through the ranges, right? This applies for every single one of these coins. It's all the same story. So I'm going to say it once over here, and then I'll take you through those ranges. You got, why is this one all the way out here? Just quickly get that back. Boom. Okay, Bitcoin. Very simply, range high, the top over here, mid-range, support zone in the middle, obviously, range low at the bottom. This was a big deviation, right? Big deviation. Deviation, you came back into the range. So now I'm going to talk you through your coins that you're listing over here. Let's have a look at how they're doing in relation to their own ranges. There's a lot of them, so be patient with me. Let's start off from the top. Ethereum. Let's just make this all a bit smaller. Okay, there's Ethereum. It's holding its moving average over here. The 200-day moving average, very, very important. Let me quickly go back onto Bitcoin just to show you this 200-day moving average. So very, very key. You can see the 200-day moving average. It is moving up here into the zone, into the mid-range. This is all a big, big support zone, which is why you can see if you start to break below that and hold underneath there, big, big, big trouble. That means you're most likely going down to the range low, all the way down to 18K. Percentage-wise, that is literally a 15, 16% move. Your altcoins are going to get absolutely smashed in that environment. They're going to go down like 40, 50%. So do keep that in mind. You break below that, and then we're talking real depression. Then that Wall Street cheat sheet does come out into play. Let's quickly grab it. I want to show you the Wall Street cheat sheet quickly. Cheat sheet. Here we go. Okay. So Bitcoin loses the range lows, and then you can say most likely this is where we were, right? We went into the anger phase. Then you had the big bounce up into this region over here. And then you can say the slow grind down like this, that's going to lead into a major depression phase. So hopefully we're not going into that, but that is a possibility if you start to lose those range lows. Okay, let's continue on here with the charts. Optimism. Optimism's had enormous moves over here. Not much chart history, but look, it's still reacting off of that 50 moving average the whole time. Let me just see, is it the 50 EMA? I have the 50 EMA on, the red one, and then you have the 200 EMA is the blue one. So reacting off of that, big test over here, bounce, almost tested over there, bounce, almost tested over there, bounce. You have the range high, and this is not such a clean chart, but that's optimism. Atom, let's see, Atom rejected off the top of this range. Next area of interest, if it makes it all the way down there, because that's a big if, but that's $9.68. Someone asked for NEAR. Let's look at NEAR. Okay, NEAR is almost already back at its range low. Look at that. Really, really being smacked for one of the big coins within the market that had a real promising future, supposedly. Range low, deviation below, came back above. If you're wanting to be a long-term investor of this, it could be worth seeing how it reacts. And I'm saying that as a keyword, seeing how it reacts at these range lows. If it manages to bounce and hold off of this, that could be a phenomenal trade with your invalidation below that region over there. Okay, RWeave. Let's quickly go into RWeave. There we go. Bam, smack, bang into the range low. Big reaction off of that level. So looking at it on a higher time frame there, range high, mid-range, rejection from the mid-range. You can see failure to close really any candles. You had one daily close above there. The next day nuked from the mid-range, came straight back down into the range low. If you can see it hold this region over here, that could be a real opportunity. Even if you see RWeave start to break, by the way, you see it break like that, but reclaim, signal to go long, target back to mid-range, and then potentially at a later stage, you get to the range high. Initially, I gave this trade over here on the retest over there, and we took our profits over here. We did have final profit set for the top of the range, but it didn't quite make there, which I'm stating the obvious, but you know what I mean. All right, looking at Filecoin, another file storage. So RWeave's also file storage, breaking below its mid-range at the moment, but reacting off the 50 exponential moving average. If it can't bounce and hold back above this mid-range, then of course you're looking to the range low, which is at about 480. Hold above here and consolidate for a little bit longer, and then still range high is in play, which is already tagged though. Phantom has had an enormous move. I mean, if there was ever such a thing as a complacency bounce, it was this one over here. Big parabolic move, complacency bounce into this one, and Selloff. So needs to hold this. I have it labeled as range high. That was just from a previous chart over there. This is relabeled as the mid-range. That would be the range high. And then you have the range low. Uniswap. Okay, Uniswap in the middle of no man's land, stuck below mid-range, stuck below the moving averages, means it's probably going to bleed out all the way down to the range low. DOT. What about DOT? DOT, I think, was at the range lows. So there we have it. DOT, similar to RWeave, being hit a little bit harder than the rest, already at its range lows, but you can see the demand that's kicking in over there. Look at the wick, the way that price is reacting off of that. If it can hold above over here, it has a chance to get to mid-range. Once you get to mid-range, you reclaim the moving averages, which means that potentially further upside. MATIC. Okay, MATIC looks like it's in trouble. There we go. MATIC breaking back into its range from the range high, similar to Phantom. I wouldn't be surprised to see something like this. Similar to Phantom, you have quite a big move. Maybe you're going to get a complacency bounce. See a lower high over there, you got to short it. You got to short it all the way back down towards the mid-range. So that's what I'd be watching over there. But on the contrary, if it obviously gets above here and can hold, then you have your invalidation to long. And if it can get back above, then it's probably going to continue its path. Solana hasn't done much, I think. Let me go to Solana quick. Solana's next. Solana has looked terrible. Look at Solana stuck below its main range low. I called this the deviation, and I just made it a smaller range within a range. You have range high, mid-range, range low over here, and then you have this trend line over here, failure to get back above. The good thing is if you are looking to long Solana, you now have something to work with, right? Because you can see what a key level this is. If Solana can pop back above this region, get above that 200 exponential moving average, then it has a chance to hold that range, and then you have a clear trade setup over there. Chainlink, let's look at Chainlink. Currently in the middle of no man's land, but if it's going to react like the other coins, it might come all the way around, trip back down into the mid-range. I gave this as a long trade as well on that exact candle. So bouncing off of the range low, reclaim that level, and we longed it to mid-range. We didn't quite make it to range high for the second TP. So currently that's where we're at. If you see, look at all your altcoins, guys. If you see the altcoins coming back up like this and setting in lower highs in relation to the ones they just set, and it comes back under mid-range, then it's going to get smacked all the way back down to range low. You can say that's a high probability setup over there. Dogecoin looks terrible as well. Very, very bad. All the way back down to range low it goes. Curve is losing mid-range, probably going to head down to range low if it doesn't recover soon. DYDX is actually holding up okay. Similar to Optimism, reactions off of that 50 exponential moving average, which also happens to line up with a retest of the range high. But be careful, because this could be very similar again to what I just showed you on Phantom. Big, strong move up outside of the range, comes back in, complacency bounce. Look, it's low, right? Lower high, lower high. Hold underneath the range, it's going to get smacked all the way back down to the bottom. So that's what I'm watching over there. GMX. Let's just see. GMX. Okay. GMX has held up pretty well so far. Not much to work with because of the price history, but just level to level, it's holding. You want this to be support. If you want to see this trend continue like it has, where it's just taking the stairs up. So yeah, you got pretty much, look, stairs up, stairs up, stairs up. It needs to hold that level. It needs to hold also the 50 exponential moving average. GNS, let's look at GNS over here. Since the Binance listing, very, very difficult thing to look to trade. Big blow off top over here. I mean, I'll just leave this and give it time to settle. One that not many people have talked about, but one of our researchers, I don't know if you guys know him, Kiwi, he mentioned this one. So shout out to Kiwi. He's been phenomenal with his calls, and this has been going absolutely parabolic, defying all odds against the market, up 6% on the day. It has been part of my dollar cost average portfolio. Every single coin here has been part of my dollar cost average portfolio. It says portfolio list on the top. So holding up very, very well. Massive spike to the upside, but need to consider taking profits on that if you're in it. Luxury has been atrocious, losing its range low and coming all the way back down to what should have actually, let me just quickly fix that, what should have actually been the deviation play over here. So this was meant to be the deviation back into the range, but look at that. Same thing, parabolic move, complacency bounce over here, and all the way back down. Be very, very careful that one of your coins don't do that. All right. ENS, also losing mid-range, falling below the moving averages, could revisit the range lows. I think you guys get the picture. A lot of the coins, there are ones with relative strength, but most of them are losing their mid-range and risk visiting the range low. SUSHI. Here's SUSHI almost already back at the range low. Manifold. Oh, big reaction. There we go, guys. That's what I'm talking about. Look at that. Range lows, right? You have clear invalidations. This is why it's worth placing bids there. Find coins that are approaching their range lows. Set your simple bids. Give yourself a little bit of room on the stop loss over there. That literally tapped the range low. Big move, 75% up. 75%. Like, I'll take that any day of the week. Beautiful. Take your profits and run. It's going back into mid-range. Probably going to reject off there and then one more sweep of the range lows. Secret network, same thing. Losing over here, the main range low, or call it mid-range or range low. I think I was treating this also as a deviation. So similar to what I've just shown you, I wanted this as the main range low, hoping that this was all a big deviation and gets back in. Might revisit to the bottom of there. So keep an eye out on that. Okay, that's against wrapped ETH, so let's forget it. Energy Web token stuck at mid-range. RUNE. Let's see, RUNE. I think RUNE is range low. There we go. Here's an opportunity as well, range low. I mean, it's breaking the trend line down, not good. That's similar to if you look at the picture of Bitcoin and you take the trend line from the lows, then you have a picture that paints like this, where you come retest that 17, 18K level. And then this would be similar to what would be the range low on Bitcoin. So when you start to break down this important area, it's not good. You want to see RUNE recapture this trend line as soon as possible, or risk going all the way back down to the lows of there. LUKSO is another good one. Falling below the range high over there. Probably next target is mid-range, which is coming in at around that 750-ish level, and then possibly all the way down to range low. All right, I think I'm running out of time, actually. Last one, the graph. The graph reacting off of its 50 exponential moving average. This is a key level, potential to bounce off of that zone. If it can hold this wick over here, you have a simple invalidation. You could go long over here with your stop below. You don't want to see prices come back down to these levels. Bitcoin on the daily over here. So here you have the light blue, 200 exponential moving average. That's been an important level. You want that to hold. That would validate the next high low. So you have high low, third high low, and then opportunity to go up. Failure to get back above that level means you're probably going down a lot more. Look all the way down, another 9% from there till you hit the 200-day moving average. The 200-day is more commonly used than the exponential. Remember, exponential gives more weight to the more recent price action, the price action that we have right now. So technically, anything that's holding above this, you should be looking for longs. As soon as you lose that, things become really bad and you start to look for low prices, right? We've covered that. Now, dollar cost averaging, what is the power of doing it? I'm just showing you $100 a day. Okay, let's be realistic. How many people will have $100 a day? Let's make it 10. $10 a day, 2 coffees, depending on where you live in the world, 2 cappuccinos from your favorite Starbucks or Seattle, means that you would have purchased since January of 2018, $14,620 worth of crypto would have been your contribution. Your increase would have been, so your total now values, you're looking at $56,379 is your return on investment. Much better than your old mutual fund, if you ask me. That's Bitcoin. Let's see what happens on Ethereum. Get a little bit more aggressive. Same amount invested. Let it reload. 14,620 is now worth 120,186. Let's see what other coins do they have on here. Let's go with 1 inch. 3,000. Okay, 1 inch hasn't lasted as long, so it starts from January. 3,660 lol minus 50%, because that means you would have started at the top of the market. What else? Is there anything that's older on here that we can put on? Let's look at what's been around since 2018. Has Cardano been around that long? Let's go to Cardano. Let's see if you started at the same time, 2018. There we go. 14,620 is now 171,000. So you're still up, right? These are the poo-poo coins of all poo-poo coins. No offense if you're an ADA hodler, but I'm just showing you the power of dollar cost averaging. That's the point. Even if you buy a bad coin, something that probably is not going to change the world. This is not my opinion or reflection on Cardano. So please, Cardano community, do not come after me. But I'm just giving an example. Put in any ticker that you want over there. The point is that for the most part, you should be up if you were dollar cost averaging, which is why I have a solid plan to dollar cost average. These positions are quite heavily down right now, 9-10%. I said I'm okay with going down around 10% on this. 10% does not mean that my portfolio is down 10%. taken 25% of my overall portfolio, which is utilized towards dollar cost averaging based on a timing perspective over the next couple of months. What that basically means is that I'm just edging in bit by bit. I'm looking for maximum opportunity in the same way that I showed you on the Gaussian channel over here, expecting that over the next couple of weeks to months, this should have its ultimate bottom. So where's this over here? We said it was by July. You should be out of the dwang, completely out of this. You should be above the Gaussian channel. That means I want to invest aggressively into this period over here. I'm not too worried about day-to-day price action on my dollar cost averaging. And if you want to set up bots that do it for you automatically on a day-to-day basis, OKX is literally the best place to do it. I haven't seen anything better than that. It's dead simple. You literally just open an OKX account. There's a link below. You get a sign-up bonus as well. Go through to trading bot. So from manual trading on the top here, click on trading bot, go to bots over there. And then you ultimately, you'd want to click on recurring buy, the recurring buy option, and you just build your portfolios. However many coins you want, change the split, make one 5%, the other 25%, do whatever you want. Decide on the parameters and enter your positions daily. Okay. Lastly, I just want to finish off with this big liquidation event. Look in relation to the past where the other major higher lows were within the market around December. Big long liquidations over there, market sell-off, but it still did set in major pivotal points. So this could just be a flush out is my point. Similar readings over here. The yellow line over here is basically the Bitcoin price. So look at what happened. Big long liquidation and then basically flush out the market, creates a higher low, and then price rallies on higher. Big flush out the market, creates a higher low, price rallies higher. Big flush out the market. You tell me what happens next, because I don't know. I'm not a fortune teller. But all I know is we're coming into mid-range. Is this still going to be a high low? Because it could be. I had it over there, but it could be. This is just showing you momentum is shifting. It's a momentum trend line. I will delete it now because it's not relevant. We're still stuck within a range. And yesterday I gave you the options of how to trade this for both the long and the short side. Breakdown, I outlined it in the daily candle newsletter. There is a link in the description as well if you do want to see that. All right, I said, what's next? This is how sentiment changed so quick. 27th of Feb, a couple of days ago, 25,000 first or 20,000, 53% versus 47. Let's see, I asked again yesterday, 54.8%, 40.2. What does this tell you? It tells you we're probably just going to be range bound. Same thing, we're just going to be range bound. They get bullish at the range high, bearish at the range low. It's typical market sentiment over there. So bears target, they're looking to tap that 21,379 in the short term. Guys, brings us to the end. The Rolexes, Rand's desperately been trying to give them away. Here they are. There's the Rolexes. Please sign up and use this. Click the link in the bio below. There is for both Bybit as well as BitGet. All you need to do is click that, sign up, take a trade. Each trade that you take is an entry. And make sure you watch his shows because he has tried to give them away. He's taken people from the Discord as well, but you need to claim them. If I'm not mistaken, I may stand corrected, but if I'm not mistaken, he has taken away the expiration time. Now, you previously had 5 hours to claim it. Now we just want you to claim it because the competition has come to an end. All right, guys, smash the like button, hit the bell notification. I will see you all on Monday. Have an absolutely stellar weekend. All of you are legends. I appreciate each and every one of you, and I will see you on the next one. Cheers for now.